Good evening, friends. This is Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting. As we speak, Treasury Consulting is a multi asset and multinational hedge fund. By multi asset, I mean to say we actively cover our positions in multiple asset classes of the globe, which includes gold, silver, platinum, palladium, exchange traded funds, shortly known as ETFs, oil, oil related spreads, natural gas, base metals, agriculture commodities, foreign exchange, contract for differences, and equities. God willing, we would be adding more asset classes in the near term. By multinational, we mean we actively cover our positions in multiple locations like United States, European Union, and Asia Pacific region. But like I repeated many a times, and I would continue to repeat all the times, that we are a proprietary hedge fund. By proprietary, I mean to say no third party. Let me repeat. No third party can invest capital in our funds. Please do take a note of that. Guys, Treasury consulting competence in the financial market speaks himself. We all are aware about that. As we speak, we shot at least 8,000 videos on our YouTube channels. And God is very kind. We are planning at least 1,000 to 1,500 videos in the year 2023 as well, which includes the law and variety of topics. Around 2 months ago, Treasury Consulting promised that we would be entering the MENA market. MENA stands for Middle East. We fulfilled our promise, and if you refer our YouTube channel, you would be able to see the videos covering the MENA market, and more videos are coming. Similarly, around 4 to 5 months ago, Treasury Consulting promised to enter in the ETF market. ETF stands Exchange Traded Funds. But somehow, due to the lack of time, we were not being able to enter the ETF market the way we planned. But now, in the early morning hours of 22nd November 2022, I am shooting my first podcast covering the ETF market, which is called Exchange Traded Fund. Guys, please understand that the ETF market is a very, very wide market we have as far as the European Union and United States is concerned. Very wide market. In Asia, you can include Singapore in that regards. But unfortunately, if we take other Asian countries and unfortunately many European Union countries, you will get a feeling that ETF market is not at all as liquid as you are thinking. Because ETF market requires 3 people to survive. Number 1 is the broker dealer. Broker dealers are the backbone of ETFs. And unfortunately, many countries of the globe have a limited broker dealer network system. Very limited. Like if I speak about India specifically, then the majority of the broker dealer networks is held by the foreign banks, which includes Goldman Sachs, JP Morgan, Citi, Standard Chartered, and variety of foreign banks, and many brokerages houses as well. I'm not saying that the Indian owned banks do not have their broker dealer networks. They do, but you can't compare your broker dealer network with JP Morgan. You can't compare your broker dealer network with Citibank, Standard Chartered. You can't compare, right? It's a common sense. Now, when I speak about broker dealer network in Singapore, then it is much wider than we have any Asian country, including Dubai. Reason being, broker dealer network in Singapore is a hub of global financial center. We have almost 500 top banks working in Singapore. Either they operate virtually because Singapore having limited space, it's just an island, or they have their offices in the Singapore. Robinson Road, which is next to our office in Singapore, is famous for bank offices. You have JP Morgan, Commerce Bank, and many other leading bank have their offices at Robinson Road. And many have their offices in Marina Bay Financial Center, Tower 1, Tower 2, and Tower 3. But having said that, broker dealer network of Singapore is much wider. We cannot say no to it. The first and important pillar of the exchange traded fund, rather the success of the exchange traded fund, is the broker dealer network. And we really need to understand that the survival of the broker dealer network is very, very important as far as the ETF is concerned. The second important participant is the authorized participant, also known as AP. Guys, there are variety of definitions we have of AP as far as the ETF is concerned on the internet. Variety of definitions, and I think that is valid also. Reason being, as we speak, ETF is amongst the most liquid fixed income market we have in the world. According to projections, it is more than 12 trillion US dollars. More than 12 trillion US dollars. Now, authorized participant is basically person who regularly interacts between a broker dealer and the ETF issuer. He is a kind of person who is authorized to interact between broker dealer and ETF issuer. There are variety of ETF issuers we have in the world. I don't want to specifically name any ETF issuer, but American ETF issuers are considered as most liquid ETF issuers in the world. Not all American ETF issuers. That's another beauty. Just like I again don't want to name few ETF issuers. When the appropriate time would come, I would be naming them as well. We are having few ETF, I would say issuers in United States who collapsed heavily very recently in the last couple of months. Third is himself the ETF issuer. The ETF issuer is a person who issue the ETF on whom name the ETF is issued. That is another beauty of life. Guys, do remember that ETF issuer can only be successful provided he is holding a very good connectivity and the network. We really need to appreciate that the networking is key as far as the exchange traded funds are concerned. Because that although the name is exchange traded fund, which specifically means that it is listed on an exchange, but the hard reality in the exchange traded fund is the block trading, which I would be discussing in this podcast. Apparently speaking, you just ask yourself that, do you know how the block trading work in, I would say how the block trading work in the exchange traded fund. So let me give you a very small and a brief example in that regards, because this is expressionless. Expressionless means the more I speak, the more it would continue because this is huge. This is huge. Let it be very honest. Suppose there is a client. Now, here I am taking a hypothetical example. Let me repeat, it's a complete hypothetical example, right? Suppose Vanguard, the largest hedge fund of the globe, they wanted to buy the ETF by JP Morgan. So JP Morgan is having an ETF who is backed up by three stocks: Apple, Facebook, and Microsoft. I repeat, JP Morgan having an ETF who is backed up by three stocks: Facebook, Apple, and Google. Now, what happens? Vanguard will contact the authorized participant. Suppose his name is AP. I will not naming him. I simply mention his name is AP. Very simple. And Vanguard, being the largest hedge fund of the globe, is of common sense not going to be buying 1 unit and 2 unit. Let's assume that the 1 unit of the ETF is costing $100. Assuming. Vanguard would be asking AP that I want 100 million units. I repeat, I want 100 million units of the ETF, which means 10 billion US dollar. I repeat, which means 10 billion US dollars. Okay, it's a common sense, very common sense that the value here is 10 billion US dollar, which is definitely not a small amount to consider. Let it be very honest and precise. Now, a very novice investor even do not know how ETF is created. Now, first of all, we need to understand that exchange traded fund can be linked with anything. We can have exchange traded funds on commodity. We can have exchange traded fund on crypto. We do have as we speak, but that's a separate reason that they are collapsed. We have exchange traded funds on any index. It could be a very widely traded index, or it could be a fresh traded index created for specific purpose, just like we are having ESG. And unfortunately, those who invested in this ESG, they are crying. We can have ETF on any relevant equity index, which is well established. We have many ETFs who are on equity indexes. They are well established. We can have ETF on the equity shares, just like I gave an example that JP Morgan having an ETF covering Apple, Facebook, and Microsoft. Just an example. In this eventuality, there are generally two kind of ETFs. Number one, they are active ETFs and they are passive ETFs. Active ETFs are those wherein the portfolio churning is very fast and should be, else you won't be able to generate a return. Common sense. While passive ETF is when you link yourself to an index. If the index goes, you are okay. If the index not goes, you are gone. As simple as that. But there is a thing called block trading. Block trading in exchange traded fund and how it works. Now here in our example is that one ETF is $100 and Vanguard want 100 million, which means around 10 billion total valuation he is seeking. The authorized participants, I assumed his name is AP, he would be going in the market and buying the shares worth $10 billion covering Apple, Facebook, and Microsoft. Why? Because one ETF is equals to Apple, Facebook, and Microsoft. Now, this is done by a block trade. Block trade having various permutations and combination. Generally, block trades are done using VWAP, volume weighted average price, and as we speak, we have variety of uh, you know methodologies as far as the VWAP is concerned, agency based, principle based, and there are a variety of VWAP we are having as we speak, to be honest. In this eventuality, he would be buying these stocks worth $10 billion and hand it over to ETF issuer. Now there is a scene. The scene is that you have to buy in such a way that the price which is quoted by the Vanguard has to fulfill. Because first of all, you cannot buy this huge quantity in the open market. If you buy this in open market, information will leak. And when the information will leak, in this eventuality, the share price will swing to a much faster sense. Henceforth, you have to buy in a private market, which is called block trading. And sometimes you have to buy upstairs market. That's another beauty of life, which is called upstairs market. Guys, the most, I don't say illiquid is a wrong word, I agree. The most closed market we have in the world is upstairs market. And 99% people in the world have limited information how this upstairs market work. And if you are thinking that exchange traded funds are having no role as far as the upstairs market, then you are completely incorrect. They do have their role in the upstairs market. Probably now we are starting with the ETF, and very soon we would be covering more about ETF on our YouTube channel. Eventually, we would be launching our ETF desk. Now, when this authorized participant buy 10 billion worth of stocks, he would hand it over to ETF issuer. Remember, the net price of the buying ends up being the same which Vanguard told. Remember this. Else, Vanguard won't be buying this. Of course, that completely depends upon the agreement which is signed between Vanguard and that authorized participant. And then the ETF issuer will be issuing the fresh ETFs, and that ETFs will move via their electronic trading account to the Vanguard. This is how the block trading actually works in the ETF market. On paper, ETF is listed on exchange. I completely agree. On paper, ETF is having extreme low liquidity. I completely disagree. On paper, ETF cannot have a block trading. I disagree. On paper, ETFs, exchange traded funds, I would say, do not have a trading via system like VWAP and all. I completely disagree. Please understand that when it comes to exchange traded funds, then the market is very, very big. We even have VWAP systems, non-VWAP systems, and we have variety of things in place as far as the I would say the block trading in the ETF is concerned. This is what I would like to say in this video. This is our first and foremost podcast as far as the ETF market is concerned. Probably very soon we will have more podcasts. This is Rahul Magan from Treasury Consulting Group. You knew my personal number, +91 9899242978. Let me repeat, +91 9899242978. Thank you very much. Have a great time ahead. In case you want any more information, you can visit our fixed income platform www.fixedincome.global. Let me repeat, www.fixedincome.global. Thank you very much, guys. Have a great time ahead.